In this video, I am going to do the technical analysis of S&P 500 index for the week starting from 3rd of May 2021. This is the weekly chart and these are the weekly candles. Through the last candle on the weekly chart, it is clearly seen that the market is now going to fall. Or you will see that on Monday and on Tuesday, the market will fall, or there will be very heavy gap down, and if not, then for sure the market will fall, because this kind of candle, whenever this kind of candle is formed, it is an indication that the market has come to a saturation. Okay, because this is a bull direction, so in this case the market has come to a saturation in the bull direction, and now it must fall, if not by like 2% or 3% or maybe 5%, then at least by 1% or 1.5% or so. The market is expected to fall, and then it may take support here. Initially this support here, then here, this is the confluence zone. So market is expected to come to 4100. So even for the people who shorted at 4100 or who bought put at 4100, they are safe here, because the market is going to hit this 4100 once again. Okay, and thereafter the market is expected to follow the global markets. This S&P 500 index is expected to follow the global markets, and global markets have shown the signs of weakness, including the Dow Jones Industrial Average Index, and all of the markets have either entered into the correction or coming into the correction. Again, why I am confident that the markets are coming to the correction, just seeing this chart, is the same thing that I've discussed last week and last week too, that because of its divergence, because of the divergence of the price, which is at 4181, because of the divergence of the price from its moving averages. The nearest moving average is ALMA, which is at 3884, and then the WMA, and then the EMA. So if we talk about the divergence from the EMA, which is at 3600, then there is a divergence of more than 500 points. This much of divergence is generally not acceptable. Okay, so the market must come down at least a little bit, and at least it should come down to ALMA, and if not, then at least it must respect this support, and then it may try to rebound from here. So my advice here is that whether you are long or you are short, doesn't matter, but you must use stop loss in your trades. You must not trade without a stop loss here, because the markets have shown the signs of weakness. Market has formed some candles, which again represents the change in the trend. So in this case, everyone must use the stop loss, because nobody knows that when the markets are going to enter into the correction. But here in this case, for sure on Monday, that will be 3rd of May, the market will fall. The market will fall, and if the market does not fall that much, in that case there will be gap down opening. There will be a gap down opening. Okay, and thereafter the market may try to rebound. And if market try to follow its bullish trend, then the market has to first cross the high of this candle. The high of this candle was 4218.8, 4218.8. The market must close or cross above 4218.8 in order to follow its bullish trend. So which I don't think is going to happen. Now let's talk about the technical indicators. So first, if we talk about the technical indicators here, the moving averages are clearly supporting the bullish trend. Okay, they are indicating that there is a very heavy bullish trend and there is a clear fan out. The moving averages are supporting the bullish trend through their patterns. However, if we talk about the divergence, then again there is a problem. The divergence and also this resistance. Okay, this resistance is supposed to be respected. The market did not respect this resistance earlier, and which is why the market is now coming back to respect this resistance, which is now acting as support. So these are two factors, and other than that, the third factor is that all of the markets across the globe are entering into the correction. Now, if we talk about the Ichimoku, then the market is not expected to hit the Ichimoku this month, because to hit the Ichimoku, market has to lose around 600 or 700 points. So losing 600 or 700 points in S&P 500 index is a big deal. So I'm not expecting the market to hit the Ichimoku on the weekly charts, at least in this month. And if something happens, then it will happen only in the last week of May. Now let's talk about the other indicators. We have stock RSI. Stock RSI is indicating a bull trend, clear bull trend. MACD is supporting the stock RSI and is saying that there is a bull trend. The momentum is, there is some momentum, but it's not that much strong. So the momentum is not that strong, but there is a little momentum in the market. But the stock RSI and MACD are supporting the bull trend. So overall, if we see the picture through technical indicators, are saying that there is a bull trend. However, because of the divergence, because of the resistance, and because of the global markets, I am expecting the market to fall. I am expecting the market to fall. Now let's move on to the daily charts. Now we are here on the daily chart. On the daily chart, if you see that this was the 26th of April, and this was the week. Okay, and these are the 5 candles. So if we talk about these 5 candles, then you can clearly see that the market was stagnant here. Market is clearly stagnant here. On this day, on 29th of April, Thursday, the market did show some good upward movement because of the earnings, particularly in Apple. There was some good earnings in Apple and other companies too. Because of those earnings, market so there was this bull candle on Thursday, but on Friday the market it came down. So overall, if you see this picture, then the market is stagnant. The market has shown the signs of weakness. Similarly, the market has shown the signs of weakness in the last week too. Last week, that started from 19th of April. So for 2 consecutive weeks, we can say that the market has not moved much, and on the closing basis, the market has not moved much. Market has only moved by 2 or 3 points. That's it in last 2 weeks. So this is one of the indication why I was saying on the weekly chart that the market is expected to fall. Okay, so nobody is now pumping millions or billions of dollars in the bull direction, because all of the markets, the global markets, are coming into the correction. So which is why this market is also expected to come into the correction. Another thing is this particular resistance, which is now acting as support for the market. Market was supposed to respect this resistance, but the market did not. So market is again now coming back to the coming into the correction, and it is now going to fall. So it will certainly respect this support, which is at 4096 or 4100, you can say. So the market will fall from 4181 to 4100. On Monday, the market is expected to touch Alma, because the kind of candle the market the kind of candle that was formed on the weekly chart, it is clearly indicating that on Monday, that will be the 3rd of May 2021, the market will fall, and on the daily chart the market will fall, and the market is expected to hit Alma. Okay, so Alma will be around 4130 or 4132, and market, there will be some gap down opening, and if not, then the market will for sure come down. and it will hit Alma. So initially it will find some support at Alma. If we talk about other moving averages, then on the daily chart, other moving averages, so this exponential moving average is at 4031. So so the divergence in the price is around 150 points, only 150 points. So this is the divergence. So this is not that much, but the divergence on the weekly chart is like 700 points. So and that much of divergence is not good. But here again, if we see that the last time the market respected the moving average, it was 25th of March, means more than a month ago. Market respected its moving average on the daily chart. So if the market means this time, because it's been more than a month and the market has shown the signs of weakness, so the market is now again, so this is the factor that market is now expected to come down. But if we see technically if we see, then the moving averages are forming a pattern, and this kind of pattern is always supported. This kind of pattern always supports the bull trend. But because of these factors that I've told you, the market is expected to fall. And if we talk about the Ichimoku, then yes, then the market may hit Ichimoku. If not in this week, then maybe the next week or the next to next week, because whenever the market hits the Ichimoku, market will find support at the boundary of the Ichimoku and also here. Okay, we have this support in the confluence zone. In the confluence zone, we have this support, and there is this Ichimoku too. So the market will find very heavy support here around 3,950 or 60. If we talk about other indicators on the daily chart, then the stock RSI is clearly indicating a bearish trend. Stock RSI is clearly saying that there is a weakness in the market on the daily charts. On the daily charts, stock RSI is clearly saying there is a weakness in the market. And on the last day, on the Friday, 30th of April 2021, the MACD has also changed its direction from bullish to bearish. So MACD is now supporting the stock RSI on the daily chart, and MACD 2 is saying that the market has shown the weakness and the market must come down. And momentum, the market lost momentum on 20th of April, means it's bullish momentum. Market lost its bullish momentum on 20th of April, 20th of April, and since then there is no momentum in the market. So all of the indicators, means some of the indicators, stock RSI, MACD, are indicating a bearish trend in the market. Only the moving averages are indicating a bullish trend. So there is this mixed result on the daily chart, and other than that, the divergence, the support, and this resistance that is now acting as support, and the global markets that have entered into the correction or entering into the correction, I am heavily bearish here, and I'm expecting the market to fall. Again, my advice is to trade with a stop loss, and you must not trade without a stop loss, because this kind of rally that market has shown because of the earnings, okay, means the market did not touched 4,300 or so, but the market was stagnant here. So people tried to keep the market in the bull trend, but they failed to do so. Okay, so you must be very careful here, and expect a bearish trend, expect a fall in the market in this week. Okay guys, so this was my technical analysis of S&P 500 index for the week starting from 3rd of May 2021. Should you have any questions or queries, you can write your comments in the comment box. Should you wish to participate in my profit booking programs, then I have given the link of these programs in the description of this video. You can take a look.